Well, the thing is, there are a lot of possibilities. So the thing is, if you're looking for business loans for fair credit, instant approval, and you want to apply and get a big loan fast, this show is for you. Don't go anywhere. You're going to love today's conversation. I guarantee it. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, we want to concern ourselves with one question. Business loans for fair credit, instant approval. How do you apply and get a big loan real fast? Okay. The first thing you need to do is you need to search online lenders. In other words, you want to seek the best lenders for business loans for fair credit. Okay, so, and we have actually a catalog for you here, a few lenders that you might be interested in, the best in our view. So you have base to credit. So this is great for loan options. So you have the loan types, you have lines of credit, merchant cash advances. If you have fair credit, not a problem with base to credit. The minimum FICO score here is 590. Sometimes it can go all the way to 575. And the maximum loan amount, $5 million, okay? And we love the fact that base to credit actually, their loans are originated from a network of financial institutions, and as a borrower, you'll be matched with loan options, and you have a wide range of loans. Then you have on deck. So when you think about on deck, I want you to think about a lender that's best for short-term loans. Okay, I mean, the thing is, they are an online lender providing small businesses with term loans and lines of credit, and they particularly focus on business borrowers who have fair credit. Okay, and so the loan types, we have lines of credit and term loans. Minimum FICO score 600, maximum loan amount $2 million. Okay, and so you have loans that are really disbursed real fast. We love that. Then you have rapid finance. And so this is great for product availability. So Rapid Finance offers lines of credit, merchant cash advances, and SBA loans ranging from $5,000 to $1 million. This is really good. So with the Rapid Finance, you have a constellation of loans. Okay, minimum FICO score 610 or 600, depending on the state you're applying from, and the maximum loan amount here is $1 million. Okay, and so this is really good. And one thing we love is that they are really fast too. And then you have Blue Vine. Okay, so Blue Vine is kind of cool if you have bad or fair credit, and they provide lines of credit. They used to do invoice factoring and term loans. Now they are focusing more on lines of credit. Okay, and the minimum FICO score 530, and you have disbursement within 24 hours, and the maximum line of credit amount $5 million. Fantastic. The second thing I want you to do, boss. So after you actually looked at the lenders, the online lenders that offer business loans and business lines of credit, you have now to think about banks and credit unions. The thing is, everybody believes that when you have fair credit or poor credit, you can qualify for a loan, for a business loan at a traditional bank or credit union. That's not true. It's all about how you play the game. It's all about how you actually prepare the whole application process. See, there is a formula. There is a formula for those things. So you want to seek banks that could be friendlier to business owners with fair credit. And there are a lot of banks out there. It's all about the relationship you have with them. So think about NPR. Think about a multi-product relationship. You want to establish that. You want to cultivate that. You really want to build that relationship. Relationship ain't going to happen in 1 year. I mean, in 1 day. It takes time. So banks are going to look at your NPR with them. And with NPR, we are talking about deposit accounts. Don't you be confused. Somebody dazzling you with, oh no, for NPR, you can put all kinds of accounts. No, we are only talking about deposit accounts in which the money is yours, not liability accounts, okay? So banks are going to look at the length of history, how long you've been with them, the size of your deposit accounts, the movements in your account. So we're talking about cash inflows and cash outflows, okay? And what is the current list of loans that you have with them, loans and lines of credit? In other words, their exposure vis-a-vis you, right? And what kind of credit cards you have. So those are important things. Don't don't underestimate them. Okay, so here are a few institutions that are very friendly to business owners with fair credit. So you have Navy Federal. This is a credit union, so you need to be a member to qualify. You need to be a member personally and business-wise to qualify for their loans and lines of credit. But they provide the temporary working capital, cash flow, money for payroll, money to help you plug the gaps between accounts receivables and accounts payable, unexpected expenses, and overdraft protection. Really, really good. Then you have PNC. PNC is also really friendly when it comes to business owners with fair credit. They will give you loan amounts from 20 grand to $100,000. They have a streamlined application and decisioning process. We love that. And no collateral is required, okay? And then you have US Bank. US Bank is really friendly also to business owners who have fair credit. And with them, you can actually qualify for a loan from $5,000 to $250,000. Think about that. And you have flexible terms up to 84 months. Fantastic. The third thing I want you to take care of is legality. Boss, are you still with me? You really need to pay attention to this one because, we've heard a lot of people who walk around and say, I'm a CEO. CEO of what? You have no business. We're talking about having a clear business, a clear-cut business, a legit business, okay? Don't walk around and telling people I have a business, but you have no foundation. What's up with that? So we are talking about legality here. So if you want to get a business loan, a massive business loan for fair credit, instant approval, and you want to be approved real fast, think about your EIN. You need to have your EIN. You want to you want to go on the IRS website. It takes about 5 minutes. Nothing complicated. You don't need a PhD to file for this, okay? And it's called the Employer Identification Number. And the IRS will get you a number, and that number is like your Social Security number for your business. And trying to set up your accounting processes. It's really important. People think about, oh well, I don't need to have a CPA to do this, but you better set up your accounting because this is going to lend credibility to your business. A lender is going to look at your business and say, this is a great business because it is solid. It is run operationally properly. Okay, so you want to set up your accounting. So when I'm talking about setting up your accounting, I'm talking about having either buying accounting software or hiring someone internally to do your accounting, or you can outsource the whole thing. Okay, think about your legal structure. Are you an LLC? Are you an S corp, C corp? Are you an LP? Whatever you are, we actually recommend on this show to actually stay away from the sole proprietorship type of legal structure because you want to basically segregate your personal affairs from your business's affairs. This is just the logic, okay? This is the formula to actually win those loans. And trying to have a registered agent, so someone who will take care of all your filing requirements at the state level, so you can maintain your certificate of good standing. This is important. Think about your licenses and permits. Are you in an industry that is heavily regulated? So those are things you got to think about. Don't sit there and tell me, hey, I never knew that they were asking me this kind of licenses and permits. Come on, man. Come on. This is not really, if you are in an industry, it is your responsibility, boss, to actually find exactly what really matters in the industry, what kind of licenses and permits are required. And think about your financial statements too, okay? So all these things I'm telling you are going to lend legality, are going to lend credibility to your business. We're talking about financial statements. We're talking about business plans, okay? And the business plan and financial statements, those things, you don't have to know how to do them. If you don't have no idea, hire someone. I want to talk to you about performance. Folks, I want to contextualize the conversation here. I'm talking to you about business loans for fair credit instant approval. How do you apply and get a big loan fast? How do you get that loan real fast? Not complicated. They're not asking you gazillions of work paper or whatever. No, they're asking you for a few pieces of information, and there is some kind of work you have to do previously to be in that position. Okay, so I want to talk to you about the performance of your business. This is important. So your business better be a high performing business, not a high performing, but it needs to generate some revenue. Okay, You can't get a business loan for fair credit instant approval if your cash flows are lethargic. I need to see some life. The lender needs to see some life. And when we talk about performance, most of the time the lender they really pay attention a lot to cash flows, because revenue is good. Revenue is fantastic. Don't get me wrong here. But revenue can be manipulated, okay? You can turn around and, go ask Enron back in the days, 30 years ago or 20 years ago or whatnot, how they manipulate the books, how they doctor the book. So the thing is, you can doctor up data in terms of revenue, but cash flows is more complicated to doctor up. So lenders pay a lot of attention to, let's say, your liquidity movements, your cash inflows and your cash outflows. So when we talk about the performance of your business, you want to pay attention to your business's financial statements. We have 4 of them. Okay, a lot of folks just walk around telling people there are 3 financial statements, but those people, they don't know, because there is a 4th financial statement, and that is the statement of owner's equity. Very, very important too. Very, very important. The other 3 financial statements are your income statements, your cash flow statements, and your balance sheet. So when we talk about business performance, we are talking about your financial statements. You also have to think about your customer satisfaction. This is important. How many new customers are you getting every month or every quarter? Okay, you want to conduct performance reviews to have an idea of what's really happening within your industry, within your company also. This is really important, okay? And you want to stay current on the market. Because if your rivals are doing something else, if they are coming up with new products and you're just sitting there being lethargic, guess what? You are losing sales, boss. You are losing sales. Okay, so you want to get up your ass. You want to get your ass up right now and start actually doing something if you haven't been doing those things so far. Because the goal is to be what? To be relevant, to be competitive. So, and you really want to also evaluate your own expectations. It's really important to every now and then to sit around and say, hey, listen, how am I doing? For real. Not to answer any lender's question, but for yourself. Is the business profitable? Are things going right? Am I on course? Am I doing should I improve something? Those are questions you need to ask yourself. Another thing you want to pay attention to, if you want to get a loan real fast and you have fair credit and you're looking for instant approval, you want to pay attention to your DTI. Well, I know people like, okay, DTI, I've heard this before. This is for credit cards. No, you got it wrong, boss. If you're thinking that way, because a DTI is really quite essential in terms of evaluating your liquidity, also evaluating your risk your risk for the lender. Okay. So when we talk about DTI, we are talking about debt to income ratio, of course, and this is an important part of your overall financial health, okay? Because calculating your DTI may help you determine how comfortable you are with your current debt and also decide whether applying for credit is the right choice for you, okay? Because the thing is, when you apply for credit, a lot of things happen, right? And one of those things is that the lender will evaluate your DTI to help determine the risk associated with you taking on another payment. Okay, so this is important. So what are we talking about here? We're talking about a fraction. The numerator of that fraction is your debt. The denominator of that fraction is your income. Very simple as that. So let's say you are making 10 grand a month, and we're talking about gross income, okay? And out of that, those are 10 grand, you are taking 30 grand. 3,000 rather. You are taking 3 grand and you are paying all kinds of debts with that 3 grand. So your DTI is 30% because you will be dividing 3,000 by $10,000 and multiplying by 100 to get the percentage. So you have 30%. 30% is really good. A lot of lenders want you to really be around 33% or less. So this is the sweet spot. So when we're talking about, let's say the levels, 35% or less, you are looking good. So relative to your income, your debt is at a manageable level. Okay. So you most likely have money left over for saving or spending after you have paid all your bills, and lenders generally view a lower DTI as favorable. If your DTI is between, let's say, 36% and 36% and 49%, you have opportunity to improve. Okay, in other words, you are managing your debt adequately, but you may want to consider lowering your DTI. And this could put you in a better position to handle unforeseen expenses. And if you are looking to borrow, keep in mind that lenders may ask for additional eligibility criteria if you are in that bracket, 36 to 49%. And if your DTI is 50% or more, take action right now because you may have limited funds to save or spend. So with more than half your income going towards debt payments, you may not have much money left to save, spend, or handle unforeseen expenses. And with this DTI ratio, lenders may limit your borrowing options. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another session of the Awesome Sweetie Kiwi Show. We are actually having a conversation today about business loans for fair credit instant approval. How do you get a massive loan quickly? Okay. Now I want to talk to you about collateral, and it's important because a lender may go around and not ask you anything about business loans, about loan collateral. Okay, but it is up to you. It is up to you to basically say, listen, I want to pledge collateral. Because what is collateral? Collateral is a term that describes an asset you pledge to a lender when you take out a loan. And this could be a personal loan or a business loan. So the thing is that if your business borrows money and fails to repay the debt as planned or promised, collateral provides the lender with another way to recover its investment by seizing the asset, by repoing the assets. Okay, so collateral at its core is a security measure. In other words, you are helping the lender cover his or her ass. That's all it is. Okay, ass covering, or if you want to use the proper English, risk mitigation. That's all it is. And those are things you need to pay attention to. And why would you want to pledge collateral? Because you want to lower APR. You probably want to, you're sitting around and say, hey, listen, I want to have a lower APR. I'm just kind of tired of those high APR. It's about time I deserve or I get a lower APR. So pledge collateral. And here are common types of collateral for business loans. You have real estate, business equipment, vehicles, inventory, accounts receivable, cash, investments. I'm talking about stocks, bonds, and all that kind of stuff, good stuff. And this could be also personal assets, okay? And how much collateral do business lenders require depends on the transaction itself, because the collateral really depends on the transaction, but also your credit worthiness, okay? And we've talked on other shows about the 5 C's and whatnot, okay? The 5 C's of credit. We're talking about what? Capacity to repay, capital, your credit, loan conditions, and all that kind of stuff. And it's important to understand that the value of collateral has to really match the kind of loans that you're looking for, okay? And when we talk about, there are a lot of loans out there that are required or may not require collateral. Some of the loans that require collateral include equipment financing, online business loans that are asset-backed. You have invoice factoring, okay? It's really important. And if you want to get a business loan without collateral, your choice of lenders could be more limited. You might need better credit to qualify, and interest rates and other loan terms may be less attractive. So things you need to think about. Now, the last hack I want to talk to you about is your credit score. So if you have fair credit and you are trying to get a massive business loan for fair credit instant approval, you better take care of your credit scores. Remember, I didn't say credit score, I said credit scores, because we are looking at this thing dually. We are looking at, there is a duality here. 2 things, your personal credit scores and your credit score, and your business credit score or scores. It's important. So you really want to pay attention to that. So when we talk about your personal credit score, we are talking about your FICO score, not only through Experian, Equifax, or TransUnion. We are talking about making sure that you basically maintain an account with a company that provides free credit score monitoring. This is important. We have covered this on this show before, boss. You probably didn't follow, but you can actually sign up with Credit Karma, okay, Nerd Wallet, Wallet Hub. You have CreditWise. Discover also offers this the service. So this is basically and a lot of credit card issuers offer this service as an add-on. Okay, you don't have to have a card with them to qualify. You just need to sign up, rather, because they just basically having access to your data is more important for them than just having a card that issuing you a card. So those companies, they take your data for free, but they turn around and they offer you ads. That's how they make money. But you signing up is free. You accessing your credit scores, that's free. Okay. And if you want to have, and also there's a website called annualcreditreport.com. And on that website, you can actually check your credit scores every year, no problem, for free. Remember that your credit score actually has 5 elements in it. Your payment history, 35%. The amount of debts you have, which is your credit utilization ratio, 30%. The length of credit history, okay, that is 15% of your FICO score. The amount of new credit, 10%. And your credit mix, 10%. And when we talk about business credit scores, you also have a way to pay attention to that. And you can actually go to Dun & Bradstreet, Experian, Equifax. You also have other platforms out there that will help you, but the most known are D&B and Experian. So basically, when we talk about your business credit scores, you're able to see how lenders see your business. Okay, it's important. And how do you establish and build business credit? It takes time. You want to start with business credit cards. You want to have net 30 vendors, okay, and also business loans. We have covered this on another show. If you are interested on this topic, please go to our catalog of videos. Just type in YouTube, just type in business credit, how to establish business credit, and you have a whole list of videos. Thank you so much for your attention, folks. I was really happy to talk to you this evening, depending on when you are listening to us. But we are talking about business loans for fair credit, instant approval. How do you get a massive amount? Okay, and first you need to seek online lenders. Then you want to seek banks and credit unions that are friendlier to business owners with fair credit. Think about the legality of your business, the performance, the DTI, the collateral, the credit score, and that's it. Thank you so much. I will see you next time, but until then, remember, stay marvelous.